presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your host, David White. As always, as we meet at the appointed and sacred time.
The following takes place between 2 p.m. and 3 p.m.
So, what do we have? Well, a market that doesn't like taking its castor oil from Mr. Jay Powell as he continues on his 50-stage tour of America with his higher and longer rate tour, giving us the medicine that we need, but not the medicine that we want. So, it's been kind of a quiet morning. It's not been a no volume. Actually, when he quit speaking, the volume did pick up a little bit. We're doing about 6.3 billion shares right now. I would imagine that support comes in. The first support probably comes in somewhere around 39.50 on the S&P cash. But there are a few things going on that we probably want to talk about. First, of course, was the higher and longer. I don't think that there's much else going on in that, other than he keeps on talking about stuff being terminal for rates. I opine that he could probably come up with some stuff that was a little bit less, cancer-like. Maybe he could find some other great analogies of losing arms and legs. Terminal seems a little bit harsh. I don't know. Just something that every time he brought up was a little shocking to me. Now, at the bigger thing going on after that is the biggest one-day anomaly in at least the time that I've been tracking options. That goes back to about 1998. So what do we have? Well, we've got something that never happens. Trying to set the odds for something like a asteroid hitting the planet and killing us all, a little problematic because it only happens every 300-400 million years. And means that you haven't really had that many. So what's the odds tomorrow of getting hit by an asteroid and all of us dying in a ball of flame? I'm just going to be as upbeat as Mr. Powell was today. So it's very hard. I mean, the odds of us getting hit one day are pretty big. Tomorrow, pretty small. But what we had yesterday was one of the biggest anomalies and something that would only happen about one every 10,000 trading days. So the question is, do we have enough data? Well, it hadn't happened before, but literally everybody went gaga for higher prices, and that's generally a very bad sign in the market. Those who get my newsletter this morning have kind of a better idea of what it is. I won't get into it on the air, but it's just, it wasn't a good sign when everybody gets all lathered up and thinking that things are going one way. But it's rare that you get the kind of numbers that we had like yesterday. And that is basically 9 out of 10 people were buying stuff thinking the market was going higher. Always a bad thing to do when everybody's on one side of the boat. All it takes is that last person that's on the other side to slip off. And, of course, it goes capsized. Other things catching my idea out here or my limited attention span today was Tesla. apparently a couple of wheels have come off in the hands of the owners of these cars, and they are beating Mr. Musk about the head and shoulders. It's not a huge volume day so far. But again, I don't like anything that suddenly has a big gap down with volume under the 3x3 right now. I think that is a setup. Why this one isn't as picture perfect as many of them are. This is a little bit tougher to take a look at. This pattern is pretty much what I'm seeing across the market. And that is that we could have a fairly steep pullback. And in case of Tesla, you could go to 150 and it would still be in a bull case from the bottom of the lows. Right there at 150, you do have a double gap. Actually, it's about 149-ish. And, you know, a lot of people are probably saying it's the end of Tesla. If the volume comes back there on a light volume, that would say niet. But I do digress. Other things going on that I thought were very interesting in FLX. What's his name now? I'm having a mental blank. Chris Rock has, from what I can tell, and reporting the biggest special ever on Netflix on the first couple of days. And why Netflix hasn't been doing a great job of coming up with series that are outstanding. They kind of come and go, and no one really thinks much about them. Certainly, their stand-up specials with things like Chris Rock and what was the other guy from Ohio? He lives in Ohio now. I'll think of him. He had his series on Comedy Special. I'm thinking what Dave Chappelle. Yeah, thank you. Dave Chappelle had a good one on there. That is actually the content that is bringing huge amounts of people in. On the downside of Netflix, they still keep throwing money at stupid stuff as far as I'm concerned, like the Prince Harry thing and some of this other stuff. Yeah, I got some good play in England, not so much here in the United States. But that stuff kind of one and done. I don't think there's a lot of follow-up after Prince Harry 2.0. And, of course, certainly he's getting all the flack he justly deserves. But my point is that the stuff that people want isn't the stuff that most of these streamers are making. But hats off to certainly for Chris Rock, who turned a tragedy into $20 million. That's what I hear he got for his special. So, yeah. But, from, a lot of people out there that have a view not in the standard narrative, I think that's where the big pickups are going to be for these streamers, the stuff that they wouldn't make before because of their own biases and prejudice. But you get outside the circle or the beltway for Washington, D.C., maybe you'll find some stuff that people do want to watch. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we come back, the first question of the day came in a little earlier. It's from Crystal. She wants to know what options look like for Amgen. So let's take a quick look here. I ran them a little earlier. And we'll take a look here. Of course, today is options rollover. So not options rollover. Today is delta neutral, for options. So don't be surprised to see a little bit of rock and roll here before the end of the day. I continue to see the weak side, the lower side, continue to deteriorate. Not a whole lot, but some throughout the day on options. We'll see now that Powell's gone and we get into the 2 o'clock hour if that changes much. For Crystal on Amgen, AMGN. I only do the monthly, so not this Friday. But you've got kind of an interesting thing. You're 228.09 for the last tick. You're doing, what I'm going to call this. 235 is the central point. But biotechs tend to have a much bigger range than many others. So it's pretty hard to make money on options on them unless you know exactly what you're doing. But because there is, the VIG is pretty big if you get the lingo. But the way that they look at it, it could expire a week from Friday, anywhere from $230 to $240. So not looking for a huge amount of movement. And the difference between that is about $1 million. So there aren't a ton of options when you look at Amgen. And, of course, it's because they're so expensive and it's hard to make money on them. Now, if you go to something else, do I have Apple? Let's see here. Yeah. When we talk about big stocks like Apple, we're not talking $10 million or chump change like that. I mean, you get into Well, just at the break-even area, 250 million for next week. But you know that could go 40 million up or 40 million down the other side of that. But you know, certainly the thing that you want to be looking at on Apple, let's take a look at here, is just how weak this thing is. Although it's up $1 today, if you break 150, the suggestion would be that you're probably going to come down to 145 at least on next week's options expiration. So just keep an eye on that. If anything turns on Apple, that could be the entire market, so to speak. But I don't know. Right now, I think they're using Apple and a couple other stocks to keep the market looking like it's treading water when it's actually going down fairly hard. And the reason one of the first things that Tim Ord taught me back in 2000 is to look, if you're talking about longer term stuff, more than just the next 5 minutes, that you probably want to look at the McClellan oscillator. Is it great for instant trades out here? That's not the one I wanted. I wanted this. There we go. It's not good for instant things, but generally you want to be trading in the direction of the McClellan oscillator, and especially if you're new, you want to do that because it's going to keep you out of the wrong side of the market. And you're going to get an opportunity, like you did yesterday, to probably get out even if you're wrong. If you're wrong and you're trading against the summation index, the chances of you getting out of that trade are much, much lower. But whether you're talking about the New York Stock Exchange, this is my own chart. I have a thing called Zero Index Centered, and what that does is as it goes up, it tries to take off a little bit for each day that it's up there, and if it's lower, it tries to add a little bit. So it tries to get to the zero over time as much as it can. So my numbers are a little bit different than the others, but this is kind of a self-adjusting version. Other people have tried other things. I don't like it because it always ends up being where you started is a major impact on where it actually is for higher and lower. When it's positive, always take a little off of it. When it's negative, add a little bit to it over time, and you should be able to even out something where zero actually kind of means zero. So my charts are a little bit different when it comes to the numbers, but I do have a little bit of gravity and a little bit of anti-gravity on this chart. But that's why it's a little bit different. The numbers down at the bottom most people don't look at are the 5 and 10% moves of the underlying advanced decline line. And, you can kind of tell that we have some problems right here in River City. But generally, I'm not going to find any kind of low in the market until we hit at least zero after a move like this. It generally will come back to at least that part. We're still a little bit above that. It would take a couple more days, maybe even some weeks to get back to zero. And even then, there is some problems on whether or not this thing is actually going to bounce when it does hit zero back there. But you can keep an eye on it. Okay, do we still hear? Let me update this here. And so we're off 8 points on the S&P cash, 164 on the Dow. Nasdaq's down, well, actually up 4 points, but not much. Russell's down 10. Let's see what else. Oh, that's the NYSE. The Nasdaq doesn't look all that different. Okay, we'll pull this up real quick. Same thing. Now, can you make the indexes go up if you buy nothing but Apple and Microsoft or push them up? You can, and it's a big enough effect that you can make it look like the market's going sideways when actually most of the stocks in the market continue to be sold off. And that's what you really see in the McClellan Summation Index, is the long-term trend of most of the stocks, not just the ones in the indexes. At one point, what you will find out is the indexes catch up with the summation index over time. Now, on the NASDAQ, you've already kind of broken below the zero line, as you see it down below. You had a little bit of a 3-4 day try to pop back up to zero and pull back down. That kind of suggests that we're probably going to see, at least on this version of the summation index chart, which I create for myself and put in the newsletter, you're looking for that zero line at least before you try to find some kind of significant low in the market. Doesn't mean you can't bounce for a day or two, but I don't see a lot other than some slow bloodletting for a while. Sell when you can, not when you have to. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we had a quick email to take a look at MongoDB, which is a database company, by the way. Databases used to be pretty much all the same. Now they are specializing in things like documents, which is kind of where Mongo comes in. So there's a lot of technology out here that's kind of specialized depending on what you have. But certainly we look at this kind of stuff. Earnings out after the bell tonight. Do I have that? Let's go ahead and take a quick look and see what we have for Mongo. MDB. Well, for bi-monthly days to cover, 2.6, but not all that much. For the last week or so, I'm going to say low to mid 20% on daily shorting from the FINRA data. Yeah, that's kind of average, though. I don't see a lot more than that. Consulting training, service fund. I'm going to say that I've talked to some people in this sector, in the database sector, and they're not getting a lot of print lately. I think they reached the most of their company, or most of their target audience, fairly early, and they may be at a point where it's not, even if they outperform, it may be problematic for them to get a lot higher prices. On a chart basis, you would look at about 235 as being fairly strong resistance. Maybe if they had very good earnings, you'd get 248 out of it. On the downside, you've got 198.09, which is the March 2nd low out here, with a gap. So that sets your range. So there's not much to the upside, a lot more to the downside. I'd say the probability is pretty good that you may see something like the 235 after hours or something. Then depending on what they say for their conference call, you may have a little bit more to go, 240, 248 maybe, if it's positive. But like I said, most of these companies have started to have some real problems doing any gains in the cloud world. So just from what I've heard lately, there's other new hotness in the sector. Let's see. And it's not a public company yet, but I think a lot of the people that are around this have been going to Databricks, which is yet another company. But, I saw their product, I don't know, a week ago Monday. And that was kind of an interesting presentation, especially its link with GPT. I never can remember which one it is. I think it's ChatGPT. Anyway, I think that's kind of taken a lot of the new hotness out of these JSON. That's JSON if you're Googling it. Style databases that are more focused on document kinds of stuff. Okay. Sherman. Yeah, you met the dad. The son, I don't know. But the dad, he's a pretty smart guy. The son just seems to be milking it for all it's worth. But he seems an okay guy. I just don't see anything new in the last 20 years from the son. Anyway, up let's call it, 350 on MongoDB, looking at earnings out after the bell tonight. And of course, if we look at all of them, we've got MDB. There's not a whole lot going on after the bell, so I don't see much going on here that would really move the market after hours. We do have a few more tomorrow morning. Is it tomorrow morning? No. So Thursday morning, we've got JD.com. Let's take a quick look at that. I mean, this really just looks like it wants to go back to this double gap at 42. It hadn't looked good. getting worse. And, of course, owning a Chinese company becomes harder and harder as the rhetoric and saber rattling gets higher. See if there's anything else. I don't see anything else tomorrow morning that gets exciting. JB's Wholesale Club, yeah, they're going to have the same issues as Sam's Club, Walmart, and the Costco. After the bell tomorrow night, you might get some movement with Oracle. This, if anything, their response to last earnings was, I thought, well overblown. And it really looks to me like this has been in a long-term distribution setup out here. You got light volume today, but that's after the bell tomorrow night. Our favorite stock in the den, where I keep on telling everybody the lines tend to be very ULTA? LTA, he said. The lines continue to be pretty big. This thing may have found some kind of high. I don't like shorting stocks with lots of people going into the store, and I continue to see that. You're down on fairly light volume today. That's after the bell tomorrow night. One of the pandemic favorites has been DocuSign. A lot of other people have gotten back into it. This thing has been banging around lately around resistance levels that go back pretty much to August of last year. I don't know if they've done enough. I didn't talk about it, although it was on my list of stuff today, and that was certainly starting to see repossessions for housings in the hottest market, including Florida, starting to pick up. And while we had kind of a respite in February, it certainly looks like from the filings we're going to have a great deal more going on in March and April and May. And if we're the hottest market in the country, which we are for a variety of reasons, I think that probably tells you that maybe we're finally close to a bigger and longer retail housing top in the market, also for used houses too. But we're getting pretty close to the tapping out the top here in Florida. And my guess is that why many builders have come here, they're going to have the same kind of problems the rest of the country really has already. But starting to see the first chinks in the armor down here in the Freedom State. So keep an eye on that. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
As we come back, question, take a look at Digital Bridge for the golfing one. Let's take a look at what these guys do. A Boca Raton company, infrastructure investment firm specialized in investing and operating businesses across digital ecosystems, including cell towers, data centers, fiber, small cells, edge infrastructure, digital, and real estate. Digital Bridge Incorporated was founded in 2009. Boca Raton, got offices out the wazoo all over the world. Okay. I'm going to have to find out more about what these guys do. This looks to me like it's trying to make some kind of base around 12, 11 bucks. Nice little move back above the 3x3 today, but it's got some decent volume. I don't see a lot in this one way or the other. But the longer it bases out here, the better. Maybe you know something about it that I do not know. And you can email me back and I will look. But not real familiar with this particular company. Okay, we got that one. We looked at Amgen. Okay, what about buying calls here for UVXY? I think it's kind of tough. I talked about earlier on saying that this market kind of looks like it certainly could be in a, did I do that right? No, I did not. Let's do this. Okay. Go back to here. Okay. I think we're kind of in a paper cut market. Now, I've heard various people call it different things, but that's one of those markets where you don't have a absolute ton of volume, but you do have kind of a buyer's strike. You don't have a lot of people selling, but each day it's just like you're going to end up taking a death from 1,000 cuts. And of course, you saw the Sand Pebbles. You know what I'm talking about. What a great movie that was. Huh. Anyway, as we think about that, anyway, not a lot of volume today on it, but problematically that you could, at this point, still be right on the market and be wrong on the UVXY or not get what you think and what you should certainly see out of it. But on a day-to-day, seeing that it's lower kind of tells you the same thing. And inside the UVXY, which is really the VIX, I don't see the longer term and shorter term oscillators that feed back into the VIX really being at an optimal part right now. Maybe those line up in a few more days, but that you can be down and still have the UVXY down on the broad indexes compared to it kind of tells you something. This thing's in a the lower you go in the UVXY, the higher the decay gets, and that's really kind of something that's hard for most people to take a look at. But you generally can't make a lot of money until they resplit this thing. I have not seen any real discussion about splits on this. Let me Google that real quick and see if we get anything on it, because I've been watching. Because generally when it gets it, okay, you got your 5-for-1 reverse split on January 25th. See if I see anything else. Didn't seem to do enough. Did this actually go off? Can't remember now. It was January of 2023. Decay rate is currently about 13% per month. So you have to actually beat a 13% loser on it. And that's why you have to have almost perfect timing. I've played it a lot in the past, but it's one of those where if the conditions are perfect, you can make a lot of money. But playing it all the time, you're going to go broke. But I don't see anything here in the news. Maybe somebody else has heard something. Here's the announced splits. If there's anything here. Okay. Okay. ETFs, I don't see anything here. Nothing listed. It's May 11th. I see nothing out here that talks about announced splits on it. So I'd be careful on it. Again, overall, the decay per month is about 13% on this. And the problem is that when you get down into these $4 or $5, that could be 25% decay. So just know that the lower it goes, the higher the decay gets, and that is problematic. So what do we have here? Take a quick look. Okay, so we're still kind of just hedging around out here at down 7%, or excuse me, down 7 points, on the S&P 500. Let's take a quick look at the volume again. See anything else? We got about 7 billion shares, but nothing really picking up with about 10 minutes left in the day. Okay, other things going on. Okay. Yeah, I don't see anything. Volume been kind of light so far on this bounce. It started at about 145 or so. That's just eyeballing it. So not much going on here. Okay, what else do we have? I know we got some more emails, so let's go to that. Again, very tough. You need to have a 200-point move to really make some money in the UVXY. And right now, I suspect, we've been talking about this setup for, 3 weeks now? We were looking for it to pop once more into the beginning of March and then start fading really until May. And this may be this one of these days where you get 10, 15, 20 points a day, but it may average 7 or 10 points a day to get back down to lower markets. But I'll see a lot more about this tonight in the options now that Delta Neutral is about over. It'll be over today at the close, and that will give me a much better idea. When we come back, we'll talk about me being gone for a couple of days and close up the rest of the shop for the week.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back, just a note, I will be indisposed for the show the next couple of days. The newsletters and updates will come out as they should. But tomorrow morning, I've got to have a couple of nodes. Nodes? Is that what they are? Nodules? Nodules taken off my vocal cords. So no talking to me, or no talking for me. No talking for me for the next 3 or 4 days. And of course, that means no talking to you either. As much as I wanted to do the show in interpretive dance, I was advised against it. But, well, you know. So, anyway, still look for my newsletters and for me to pop in the den next couple of days. Should be back Monday, maybe the latest on Tuesday, but I think Monday. Everybody says it takes about 3 days. I've got to do something that's tough. Just shut up. Of course, it's not like I have an opinion about anything. Anyway, getting ready to end up the rest of the day here. Light volume, delta neutral, or lighter volume, delta neutral. But I don't see anything that just doesn't say we continue to sell off slowly. At least through today, options have kind of shown that the next stop is probably somewhere around 390 on the SPYs. So we shall see over the next week. But like I said, this could be like a whole 2-month thing of a bear market that maybe is a baby bear, maybe a cuddly bear, but still means that we get lower prices for a while. I think it's going to be very tough for a lot of folks. I've seen a lot of things we talked about earlier in the show. The biggest signal ever I've seen in the option market. Not exactly sure what it means quite yet, but it's probably not something good. Sell when you can, not when you have to, and we'll see you again on probably Monday, definitely Tuesday next week. See you then.
Building wealth trading in the stock market seems impossible to most